Good evening friends, once again welcome to the video. This is part 3 of our series on UCP DC Uniform Customs and Practices for Documentary Credits, ICC publication number 600. Here we will have a look at article 9 to 13 in this session, this being the part 3. Advising of the credits and amendments. Article 9 talks about advising of credits and amendments. A credit or an amendment may be advised to the beneficiary through an advising bank. A credit or an amendment may be advised through a advising bank, which means the issuing bank may advise directly to the beneficiary or it may choose to advise through an advising bank. The applicant may in their application suggest a bank. The issuing bank may use the same bank or a different bank. If the issuing bank uses a different bank, they have to take the approval of the applicant. All those things we will have a detailed discussion while we are discussing the ISBP, International Standard Banking Practices, ICC publication number 745. So the issuing bank may choose an advising bank and ask them to or authorize them to advise the credit to the beneficiary. The advising bank advises the credit without any undertaking to honor or negotiate if they are not a confirming bank. The advising bank, which has a nomination to advise, advises the credit without any risk and responsibility on their part. They advise without any undertaking. They don't promise to honor or negotiate if they are not the confirming bank. Advising bank, by advising the credit to the beneficiary, signify, or an advice by the advising bank signifies that they are satisfied with the apparent authenticity of the credit. The advising bank signifies that they are satisfied with the apparent authenticity of the credit. It also signifies that they are satisfied that the credit or the advice that they are making accurately reflects what has been received. That means the LC received by them is reasonably complete, comprehensive, or meets the minimum requirements, and they are satisfied that it accurately reflects what has been received, and the credit, that is the LC being advised to them, the letter of credit or the documentary credit. So by advising, they have to satisfy themselves about two things. One, the apparent authenticity. Second, the accurately reflecting the terms and conditions of the message that is received. In other words, it should not be garbled. If there is an empty 700 and empty 701 type of sort messages, all of them should be complete, and that is the only thing that the advising bank ensures. They don't undertake to honor or negotiate if they are not a confirming bank. The advising bank again can use services of another bank to advise to the beneficiary, which means the first advising bank may send the LC, the letter of credit, to another advising bank, the second advising bank, for handing over this LC or DC, letter of credit, documentary credit, to the beneficiary, if they are the beneficiary's bankers. This second bank, which ultimately gives the credit to the beneficiary, is called the second advising bank. Banks must use the same bank to advise an amendment. If the LC is advised through HSBC Chennai, then we cannot advise the amendment through Stancy Chennai. HSBC Chennai has to receive the amendment, and then maybe we can request, please have it sent through this particular bank to reach the beneficiary. If an advising bank or second advising bank is used, then the same bank has to be used. The advising bank have to inform issuing bank without delay. The second advising bank have to inform the issuing bank without delay. What they have to inform without delay? If they are not willing to advise the credit. So the bank that has received the instruction to advise the credit should inform the bank from whom the instruction has been received if they are not willing to advise as requested. The bank that has received the instruction has to inform the bank from whom the instructions have been received if they are not willing to act as per the request for advising the credit. Also they have to inform if they cannot satisfy themselves about the apparent authenticity. The receiver of the transmitted message should inform the sender of the message if they are not able to satisfy themselves about the apparent authenticity of the message. Alternatively, if the authenticity cannot be established, the first advising bank or second advising bank may choose to advise the documentary credit to the beneficiary, stating that they are not satisfied with the authenticity, that it is not yet authentic and it is for the purpose of information only they are advising. So they will inform the beneficiary that they are not been able to satisfy themselves about the apparent authenticity, and they will advise the credit. Simultaneously, such a bank should inform the issuing bank also that they have not been able to satisfy themselves about the authenticity of the message, but still they have advised the credit to the beneficiary. Amendments. Credit can neither be amended nor cancelled without the agreement of the issuing bank, the confirming bank, and the beneficiary as applicable. Credit being an definite undertaking, an irrevocable undertaking, it cannot be amended unless the beneficiary agrees for the amendment. If there is a confirming bank, the confirming bank should also agree. Issuing bank means the bank that issues the credit, they should be willing in the first place to generate an amendment. Issuing bank is irrevocably bound as at the time it issues amendment. Likewise, in the Article 7 discussing the issuing bank liabilities, we have seen issuing bank is irrevocably bound the moment it issues the credit. The confirming bank is irrevocably bound the moment it adds its confirmation to the credit. The issuing bank is irrevocably bound as at the time it issues amendment. The confirming bank is irrevocably bound as at the time it extends its confirmation to an amendment and advises the amendment to the beneficiary. If it does not advise the amendment, or if it advises amendment saying that they have not extended their confirmation to the amended credit, then there will be no liability on the confirming bank. In such a case, the confirming bank should inform the issuing bank as well as the beneficiary that the confirmation is not extended and they are no more liable, but they will choose to advise the credit to the beneficiary. The terms and conditions of the original credit and previously accepted amendments, if any, will remain in force until the beneficiary communicates its acceptance of the amendment to the bank that advised such an amendment. So when an issuing bank makes an amendment at the request of applicant, or the beneficiary would have asked the applicant to amend, and then applicant would have asked the issuing bank to pass on the amendment or issue an amendment to credit, the issuing bank will issue the amendment and send it to the advising bank. The advising bank would advise the credit for further advising the amendment to the beneficiary. Beneficiary has to convey and confirm their acceptance, and they have to communicate the same to the issuing bank through the advising bank. If the beneficiary fails to convey their acceptance and communicate so to the advising bank for passing on this information to the issuing bank, then the credit as unamended and the previously accepted amendments will remain in force, will be effective, and will have to be complied by the beneficiary until and unless beneficiary accepts this amendment. Alternatively, if the beneficiary is refusing, they should inform the advising bank. And the third option is that the beneficiary may not convey their acceptance or refusal, and they can communicate in another fashion. How? They will submit documents which are compliant with this new amendment which is yet to be accepted, and then if that be the case, it will be considered the LC stands amended as that moment, and this presentation of documents which complies with this amendment is considered as acceptance of that amendment. But this cannot be taken at all for all amendments, because there could be detrimental amendments, there could be amendments which does not give a clue from the presentation whether it has been accepted or not. But if the nominated bank can make out that it has been accepted by virtue of the documents being compliant with the amended LC, then it is deemed to be an acceptance. The notification of acceptance or rejection, the notification by the beneficiary of the acceptance or rejection given to the advising bank, should be passed on to the issuing bank, the bank from whom the advising bank received the information. The second advising bank should pass it on to the first advising bank should pass it on to the issuing bank if it is so applicable. Partial acceptance of an amendment is not allowed. If the beneficiary says, I am accepting point 1 of the amendment but not point 2, it means it is rejection of the amendment. Any provision in the credit, if the credit states or if it contains any clause which says the amendment shall enter into force unless rejected by the beneficiary, such clauses will be disregarded. We cannot compel the beneficiary to convey their acceptance or refusal. The amendment shall enter into force unless rejected by beneficiary. We cannot have a clause. We cannot automatically say 7 days from the date of receipt of amendment this will be effective. If you want to reject, you have to reject before that. We cannot compel the beneficiary. Teletransmitted and pre-advised credits. Nowadays it is not happening, but earlier there used to be something called 705 frequently used by various banks when they intend to issue a credit, and thereafter the credit will be issued in more detail. So pre-advised credits is something like an 705 wherein the issuing bank gives an idea to the beneficiary and the beneficiary banker that such and such a credit is in process and will be issued shortly. So this article talks about such situations. Authenticated teletransmission, just like Swift MT700 or a telex message used to cipher. is deemed to be the operative instrument. The authenticated teletransmission is deemed to be the operative instrument. So it should be a teletransmission and it should be authenticated. Subsequent mail confirmation will be disregarded. If this particular letter of credit issued by SWIFT MT700 format is again sent again by mail, that will be disregarded, and this authenticated teletransmission, MT700 being authenticated and SWIFT message being teletransmission, this will be considered as operative. If the credit contains a clause saying full details to follow, or mail confirmation is to be operative and this is not operative, then the teletransmission will not be considered as operative and we will wait for the mail confirmation or other details to follow. The preliminary advice of an issuance of a credit shall only be sent if the issuing bank is prepared to issue the operative credit. An issuing bank is supposed to send an MT705 type of preliminary advice to an advising bank beneficiary if and only if they feel that they will be issuing the fully operative credit shortly, not after 1 year, but maybe within a month or so. One is irrevocably committed to issue the operative credit. The issuing bank is irrevocably committed to issue the operative credit without delay, consistent with the pre-advice. If the pre-advice says $1 million, the main LC cannot say euro $500,000. It should be something around $1 million. Unless the issuing bank is willing to issue an operative credit, they should not advise the pre-advice, and they are irrevocably bound to issue the operative instrument. Nomination, Article 12. Nomination by an issuing bank is an authorization to another bank in the beneficiary's place to honor or negotiate. This nomination to honor or negotiate does not impose any obligation on the nominated bank, unless and until the nominated bank is the confirming bank. So, the nominated bank, the advising bank just advises the credit without any risk and responsibility, does not undertake and is not obligated to honor or negotiate unless it is confirming bank. The nominated bank, by virtue of its nomination, is not obliged unless it is a confirming bank, or it expressly agrees and so communicates to the beneficiary. What is expressly agreeing? You have to say, yes, I am willing to act as per the nomination, I will undertake a deferred payment undertaking, and I will pay on due date, I will accept a draft and I will pay on due date, or I will pay on site, or if it is a negotiable LC, that as a nominated bank I will negotiate drafts drawn on party A. So this, the nominated bank should communicate to the beneficiary. Unless and until the nominated bank does this, they are not having any obligation to honor. If they are not willing to act as nominated bank, and if there is a specific nominated bank, that bank has to go back to the issuing bank and inform them they are not willing to act as per nomination. Nomination to accept a draft or incur a deferred payment undertaking is automatically an authorization to purchase or prepay such draft or undertaking incurred. Nomination to accept a draft or incur a deferred payment undertaking by the issuing bank is an authorization by the issuing bank to the nominated bank to purchase or prepay the accepted drafts or the deferred payment undertaking incurred. Earlier this clause was not there, and because of the good old BNP Paribas case and further clarifications and decisions thereafter on UCP DC 500 and other things, this has now become very essential and crucial to have it included in the UCP 600. Unless the nominated bank is a confirming bank, receipt of the documents, examination of the documents, and forwarding such documents to the issuing bank does not make the nominated bank liable to honor or negotiate, and this does not constitute honor or negotiation. Receipt of the examination and forwarding of the documents does not make the nominated bank liable to honor or negotiate. The receipt or forwarding does not make it liable to honor or negotiate. Also, this forwarding of the documents does not constitute a honor or negotiation. Honor or negotiation happens if they say we are honoring this presentation because we are nominated bank and we are satisfied about the compliance. So authorization to honor does not impose any obligation, and the receipt, examination and forwarding of documents also does not make the bank liable to honor or negotiate. Bank to bank reimbursements. Reimbursement is obtained by the nominated bank claiming on another party. If it is to be obtained by claiming on another party, the credit must state if it is subject to URBBR or not. What is URBBR? Uniform Rules for Bank to Bank Reimbursements, also called as URR. So this uniform rules for reimbursements we have seen in detail in some other lecture. Here we need to know that if the LC says the reimbursement is by the claiming bank claiming on another bank called reimbursing bank, then the LC should state whether URR is applicable. Now, because of the changes in Swift standards and the introduction of UCP 600 and these clauses, there is a field in the MT 700 in the beginning of the LC itself saying this LC is subject to UCP plus URR latest version or UCP only or whatever it is. So there it will definitely say it is UCP plus URR. And then the credit should also state whether the reimbursement is subject to URR or not, if it is not mentioned there. Suppose it is not to be obtained by claiming on another party, then it means either issuing bank's account will be debited by the claiming bank or the claiming bank's account will be credited by issuing bank and things like that. What if the reimbursement is by claiming on another bank by the claiming bank and not subject to URR? Then the issuing bank must provide the reimbursing bank with a reimbursement authorization. So it could be a US dollar LC, the reimbursing bank could be in New York, the issuing bank may be somewhere in Africa, and the beneficiary and the denominated bank may be somewhere in Asia. So the bank in New York, the US dollar correspondent of this US dollar LC is called the reimbursing bank, and they should have an authorization from the issuing bank to reimburse the claims received. It should say whether the claim will come from any bank or a specific bank. That is regarding the nomination, availability. The reimbursement authorization shall not require a certificate of compliance from the nominated bank that the credit terms have been complied or documents are compliant. Now, if such a compliance is called for, and because of this there is a delay in getting reimbursed by the nominated bank, the loss of interest and penalty and related claims raised by the claiming bank on the reimbursing bank will be payable by the issuing bank. The issuing bank is also liable for any penalty for claim not being paid by the nominated bank for reimbursement on first demand. The claiming bank, the bank nominated under the LC, will claim from the reimbursing bank, the bank nominated from whom the claim has to be made. And if the reimbursing bank fails to pay on first demand, then the claiming bank may claim penalty and issuing bank remains liable to pay up such penalties for not having reimbursed on demand. So these are up to articles 19. We have seen article 9 to 13, and we shall have a detailed look at other articles on another session. Thanks for watching. Keep